Hello and namaskar viewers, I am Sanjeev Pandya welcoming you to the new show right here on ITV Gold. Of course, same individuals but new month has begun. So happy month of May to all of you. And since the new month has begun, as you all know, the tax season has come to an end. So we're getting ready to bring you the first episode of the season 2 of the Business Talk with AJ right here on ITV Gold. In case if you missed the first season, what we did in that season and in that show Business Talk, we would talk about all business news from USA, business news from globally, and how companies are affected, what's happening with the companies in the USA, global companies, business world up and down, whatever was happening, that's what we covered, and we're going to continue to do that in this season 2 as well. But it's going to be different. As you know, South Asian community has grown and succeeded in the USA in various fields. South Asians own variety of businesses, and some of them they really are doing very well. Majority of them are in certain industries. So in this show, the Business Talk with AJ, and in this season 2, every week we're going to pick on one industry and then how that industry's business is affected, how taxes also play a role in that. Because remember, the show is brought to you by Science CPS Services, a professional tax accounting firm for personal taxes and the corporate taxes. So we have to bring in a tax angle as well. Going forward, there may be, part 2, part 3, part 4 of certain industries such as motels and convenience stores where South Asians are there in the majority of it. So we have a lot more information to give you, and believe me, this is a show that you will really learn a lot from it, because there is no other show like this on South Asian television. So with that note, I'd like to welcome you all, and of course welcome Mr. AJ Kumar of Science CPS Services, a CPA and MBA with over 25 years of experience in professional personal accounting, and has been guiding, has been suggesting to all of us in the taxes and the business matters. So he's joining us, and I'd like to welcome him. Sir, welcome to the show.
Thank you, Sanjeevji. Thank you for the kind introduction. And you're right. In this season, we will be talking about one industry in each episode, and today's topic is IT consulting industry.
That was my line.
And we'll be talking about.
He's so excited
and
that he
we'll
wants
be talking
to talk about
the challenges that this type of industry faces. What are the unique strength, weakness? What are the pitfalls? What they need to be careful about? What are the tax savings? What are the tax gray areas? All about IT consulting company. So if you own an IT consulting company, you do not want to miss this episode.
Okay, very interesting. That's a good start. Now, IT consulting, of course, South Asians and especially Indians have advanced very well in IT industry. There are so many IT companies and they are doing so well. They're offering thousands of varieties of products and services. So the first episode is going to be for the IT consulting. Now, AJ, with your experience in the tax accounting matter and everything, what makes IT consulting different when you look into their financials and then when you file their tax return?
Absolutely, great start. So an IT consulting company typically will have a minimum capital investment. You start trying to go for a Subway or a Dunkin' Donut or a grocery store. You need a lot of capital, lot of money,
$750,000
to start that business. An IT consulting company, you can start with a couple of $100, just create a company, and now from your basement, you own an IT consulting company. So the good thing is minimum capital investment is needed. But the other thing that you have to be careful about, especially when you grow, you will have people who are working for you. A typical IT consulting company, Sanjeevji, have employees working in all over the state, because these companies have this staff augmentation model, they call it, where the staff is working for the client.
Yes.
The staff, the employees on their payroll, but one employee is in Colorado, one employee is in California, one employee is in Florida. So the IT consulting company is typically registered in multiple states. A New Jersey-based IT consulting company with 5 employees might end up filing taxes in 6 different states. And you wonder how so?
Yes.
5 employees working in 5 different states, but since you have headquartered in New Jersey or for that matter Delaware, you pay, file taxes in the home state and then 5 other states because you have employees working in those states. So there are unique problems, unique situations that the IT consulting companies faces. The other thing you will notice with the IT consulting company, especially when you start growing, the client pays 45 days after you send them the invoice. When you send the invoice, after 30 days, after the month is over, you take the invoice, how many hours this employee worked, you send the invoice and client pays in 45 days, 60 days, but the employee needs to be paid every 2 weeks.
So you need to have reserve cash for that.
You have to have a lot of cash.
Yes.
Typical IT consulting salaries are 8,000, 10,000, more, a lot of money. When you are paying them $5,000 every 2 weeks, by the time client pays, you have already paid them 5 times. Because the whole cycle is at least 10 weeks, if not 12 weeks.
Correct.
So when you are hiring an IT consultant, you have to have a working capital of at least $25,000. And in this example, we are just assuming that their salary is $10,000. So an IT consulting company have a lot of challenges when it comes to financing, even though you can start with no capital, but when it comes to growing the company, you will need some bank loan or line of credit. Then there are a lot of other challenges that will walk you through when it comes to the IT consulting.
Are the IT companies' employees are all 1099 or they can be W2 as well?
Well, most of them are supposed to be W2 unless the relationship is corp to corp. What I mean is, unless the employee says, instead of paying me on my social security number, you pay my corporation, my EIN, unless the employee decides to open their own company and then the relationship becomes corp to corp, your company pays their company, the employees needs to be on the W2.
Okay, all right. So that's now this is the first step. Talk about IT company, that when you start IT company, you can start with very low balance and then continue to build up. But as you build up, you need to have enough working capital. Now, when IT company comes to your mind, obviously the first thing comes to your mind is the software.
Right.
Right. So now the software comes into mind. Now, how does the software business work? Because company buys software, company services the software for the clients. How are they recording that in their books?
I'm glad you asked. So IT consulting company at a high level can be of 2 types. Either it's a staff augmentation model where you're not building a software, you don't have a product, you just hire a lot of people and place them on the client side. A lot of IT consulting company are actually staffing companies, staff augmentation company. So payroll is being run under the IT consulting company while the employee is actually working for a different client.
Correct.
That's the staff augmentation model that we talked about in the first section. The other type of IT consulting company are the software development company that you call, hey, I need this software. Can you help me build a custom software for my need? Or the companies that are making software like Word, like QuickBook, like any other software that anybody can use. So they are called product companies.
Okay.
So you can be a custom design software company or a product company where you build a product that anybody can use in the market.
Correct.
The upside or the downside is when it comes to the expenses. If you are building a product, you cannot really expense everything when you incur. Let's say if it cost you 2 years, 10 employees, almost $2 million. Is this $2 million your expense? It's not an expense. You put it on the balance sheet.
Okay.
We call it as a product development cost. It's your asset. You can amortize this cost. If most of the development is done in US, you can amortize it over 5 years. If the development is done outside US, a lot of IT consulting companies have back office in India, then this amortization needs to be done over 15 years. What it means is, once people start buying your software, once you start booking the revenue, then you start putting the expense, putting the amortization on the P&L. But when you incur the expenses, you don't put it on the profit and loss system. You don't count it as an expense. The problem though is, what if nobody buys the software? You build the software.
Correct.
I have been waiting. Nobody is buying the software. And based on how the market looks, actually there is a better software in the market already.
Exactly.
Then what you do? It's called impairment. I invested $2 million into this software. I don't think this software is worth 1.5 million. I think this software is worth only X million. Then the difference on what you spent versus what you believe the market value of the software is called impairment.
Okay.
And you can book it as an expense immediately. As soon as the impairment is decided, you can book it as an expense.
All right. So that was very in-depth, explanation of the software and amortization and how does it work on the tax returns. I can't stop myself asking you a question. IT companies in the hardware business, all right? They're IT companies, but they are strictly, taking care of clients' hardware needs and fixing computers and whatnot. How does that work?
Absolutely. So if you are fixing, repairing,
Yes.
then you are selling the service. But if you are in a model that if the client needs a hard drive, you can supply the hard drive. If the client needs a monitor, you can supply the monitor. Then a lot of times these companies maintain their own inventory. Just because the inventory is easily available, a lot of IT consulting companies are going away from maintaining the inventory.
Okay.
When the client needs something, when you need something, they will find who has it, they will place the order and get it for you. So inventories are not typical. Even in the hardware companies, they're essentially selling the service. They come to you, charge you a fixed fee, does the work, they will do what needs to be done, and then they will charge you X amount of fees.
What are the challenges, AJ, that you have seen in the recent years the IT companies face? Some of them become very successful, some of them become very average business, some of them, they just couldn't take off.
So there's a trick to it, if you can believe it. So it's a complex business. IT consulting business has a lot of unique challenges that no other industry has it. First, the payroll is complex. When you hire these people, these independent consultants, they have their own demand. I want 80% of what the client is paying. I want X amount. I want H1. I want L1. So the payroll system is sort of customized with each employee. As much as we say there is no capital investment needed, for each employee you need X amount of money, which could be $30,000, $40,000, $50,000 per employee. If you want to add 10 more employees, you better have $500,000 available to you. Now, who has $500,000 sitting on the side? In that case, making sure the bank is available, or you have a factoring company lining up, and we'll talk about factoring company one more time.
I tell you what, factoring company is going to be very interesting topic to discuss. So why don't we just take a short break?
Absolutely.
And then when we come back in the second part, AJ will explain to us how does the factoring companies work for the IT businesses when they really need a huge amount of cash. Once again, viewers, in case if you have just joined in, this is the Business Talk with AJ, Season 2, Episode 1, and today's topic is IT consulting. We'll be right back after these messages. Please don't go anywhere. Welcome back to the second half of the Business Talk with AJ. This is the Business Talk now on ITV Gold. Season 2, Episode 1, and as I mentioned earlier that in this show we're going to be talking about various industries where South Asians are heavily involved and they have excelled in those industries. We're also going to have a guest coming in from various industries and they're going to give their input that, what challenges are they facing, what difficulties are they facing and whatnot. So all in all, it's going to be a very, very informative show, the Business Talk with AJ Season 2. And it continues. The show is brought to you by Sai CPA Services, a full-fledged, complete professional tax accounting firm and also financial advisory group. Also, they can guide you where to invest money in order to save taxes. And there is always a time for you to make an appointment to go and see them and talk to them, see what you can do with your personal taxes as well as your corporate taxes before the tax deadline. And Sai CPA Services on hand, trained, knowledgeable and experienced CPAs on hand. They will help you out. You can reach them at 908-380-6876 or visit saicpaservices.com. With that note, let's continue our conversation with AJ. Before the break, we stopped at factoring because when a situation comes in, when IT company needs a large amount of money, to take care of their employees and everything, and when they are not sitting on that huge pile of cash, factoring comes in picture. So let's cover factoring and the business financing affecting IT industry.
Absolutely. So if you were to ask me what's one trick why some of these IT companies are so successful and some of them are not, one trick is financing, availability of the money to hire, to expand. A lot of banks wouldn't give you the loan when you're starting up, especially when you're a startup. And sometimes people make this mistake, Sanjeevji, they don't show enough profit. For an IT consulting company, the line of credit the bank will give you is going to be directly proportional to the amount of profit you are showing. A lot of IT companies, even though they are not making money, they will show profit on the tax return. They will pay taxes so they can qualify for the line of credit. The bank is giving the line of credit. That's the only way for you to be able to hire the next staff. Remember, when you hire somebody, the salaries have to be paid within 2 weeks, but the client will pay after 10 weeks, if not 12 weeks. Especially if you are a new IT consulting company, or if it's a foreign-owned IT consulting company. A lot of IT consulting companies are owned by people who live in India, work from India, or who are on H1 visa. No bank wants to give them any loan, any line of credit. What do you do then? You go through the factoring. There are companies who will buy your AR, account receivable. You work with the client, instead of paying you, pay the factoring company. You are sort of selling the contract to them. They pay you X amount upfront, a certain percentage depending on how old the relationship is, which you can use to pay the salaries. So this factoring concept or a bank line of credit, in short, availability of easy cash flow, availability of financing is one trick that any IT consulting company needs to grow.
For an IT company to succeed, obviously they are in the service industry and servicing clients' needs, whether it's a software and hardware. That is the key thing, and that's what makes IT companies successful. So that means employees play a very major role in that part, right? You need to have very qualified, very talented individuals who know the system, whether it's a Java and COBOL or any system, who know it very well and take care of clients' needs. Now, guide us through employees' benefit. How does the retirement plans or other benefits offered by IT companies for their employees?
I'm glad you asked. So just because the whole business is all about the employees, there is nothing else you are selling. You are selling your employees' time.
Yes.
So it's a cutthroat business. A lot of these employees will switch employer for $1 or $2.
Oh, really?
What I mean is, if this guy is paying $60 an hour, the other one is paying $62 an hour, they will flip. They will join the other guy because they're still working with the same client. So each client is served by a lot of subcontractors, a lot of IT consulting companies. It's very common for these employees to flip, to switch over to different companies. So what can you do to make sure you buy the employee loyalty? Give them some extra benefits. It's not just about the salary. Consider health insurance plan. And the best part is, a lot of people feel health insurance is very expensive. It's not that expensive, and you don't have to give all of it. You can give certain percentage of the health insurance. But when you're buying the health insurance in a group, it's going to be cheaper than for this employee to buy the health insurance alone. So not only in a group is cheaper, you can subsidize it by 10%, 20%, 30%. That will make this employee stay with you, because the next company may not be offering the health insurance. The second benefit you can consider is 401k. 401k is a retirement plan. For a qualified retirement plan, you have to contribute up to 4% of the salary. The employee can contribute as much as they want. The employee can contribute up to 22,500, or if this over 50, maybe 30,000, and that's tax deductible for the employee. So if the employee is in 30% tax bracket, contributing 30,000, it's saving them $9,000 a year. So they will not switch. If somebody is giving them $3, $4, $5 extra, $10,000 extra for the whole year, they will not flip, they will not switch, because what you can offer, and it's not costing you anything because you are only giving 4%. It's only coming out of their salary. The next employer is not offering 401k. Not everybody understands it. Not everybody knows about it. There are a lot of benefits you can offer 401k, health insurance,
So these
FSA account.
these are the added benefits and advantage for the employees to stay within the company. So obviously, company can look forward to have a better future. All right. Before we go into the most important topic of the day related to IT industry, AJ, let's just talk about IT industries owned by Indians, and they've been super successful. Of course, I can name some, and then you can join me if you have other names. One is Infosys,
Absolutely.
doing phenomenal business.
Google.
Google, but Google not founded by Indian. I mean,
No.
I'm talking about
Indian
South
founded
Asian-
company.
Indian,
Of
Indian
course, of
companies,
course.
right? Indian company. Google is. I mean, sorry, not Google. So Infosys is one.
Absolutely. Satyam Infotech.
I think a week or two ago,
TCS.
I was reading the financial news, and Infosys made a handsome profit in the last quarter. Wipro is one. Wipro is doing Azim Premji owns
Absolutely.
it. Infosys is by Narayan Murthy, right? And Narayan Murthy's son-in-law is the Prime Minister of Britain, Mr. Rishi Sunak. Then you have TCS, Tata Consulting Services. So some of the IT companies have found a way to be super successful, not only in India or in US, but on global.
Absolutely.
Yeah.
100%.
Yep, and there could be more. Now my question to you is, in the end, what are the common mistakes that some IT companies make and that could result in the downfall of them?
Absolutely. I'm glad you asked. So it all starts when you start the business. It all starts the type of business you are starting. A lot of people not knowing any better will end up starting a C corporation or LLC. Remember, you are in the business to sell time. S corp is the structure you want to go with. If you are not sure, or if you are trying it on your free time, part time, you can start with LLC with an intent to convert it into an S corp later on, but you do not want to be paying the self-employment taxes, which can cost you additional 15% extra taxes by being an LLC. Or if it's a C corporation, you pay double taxes. So make sure when you start on the right foot. You start the way it's supposed to be started, so you can be compliant and you can be cost savvy, you can be cost efficient. The second thing you want to make sure, the structure is complex. Every single employee you hire, every single state you have the new employee in, you need to have certain registrations over there. You need to have certain filings done with each state. So when you are starting the business, know full well that it requires a lot of compliance. It requires a lot of rules and regulations that you have to follow through. Make sure right from the beginning, right from the startup, you are doing it right. You are not really taking the shortcuts about it. In the long run, it will cost you a lot more than what you want. The third thing that you want to be careful about, the funding. You have to have an emergency funding. You have to have some sort of cash flow buffer that you are maintaining. Even if you are taking a line of credit against your home, make sure you have certain amount of funding on the side to grow the business. When you hire a new employee, you will need some funding. You will need to pay the salaries on time. If you are starting and you are the only employees, be retirement savvy. Make sure you understand the difference between the IRA, the 401k, the SEP plans, and make sure you are putting the maximum money possible into your own retirement account to pay the least amount of taxes that you can pay.
These are some of the very key points that you have shared with us, to avoid these common mistakes for IT company to be successful. We've got 1 minute left in the show, and I want to ask you a question. It just came to my mind. For IT company to be successful, even though let's say they have best employees and they're providing great service and everything is perfectly fine. But remember, they're going to need more employees and they're going to be sponsoring their H1 visas. Now, H1 visas is not really that easy, right? Because when the H1 visas are issued for the individuals for certain companies, the certain companies, all the records must be intact and they must have good
Absolutely.
rating with USCIS, am I right?
Absolutely, absolutely.
So that also makes a difference, and that is a very key part, because once you have reputable company in the books of United States government, then it becomes easy.
100%, and you have to be able to show on your tax return that you can afford to do
Yes,
the H1.
yeah.
H1 is a lottery system, but when the lottery, you are selected in the lottery system,
Correct.
you have to provide them tax return copies, you have to be providing them the bank statement, a lot of information to justify that you can afford the next person, you can afford the next H1 person. So don't be too greedy for your own good and not show the profit. You make sure you are showing enough profit to qualify for the line of credit, to qualify for the bank loan, to qualify for the factoring, to qualify for the immigration. The list keeps going on and on.
All right, very well said. Thank you so very much. So, in this first episode of the second season of the Business Talk with AJ, today we covered IT consulting. That's the topic of the day. Next week we're going to have another industry, and we're going to continue to give you in-depth look of the industry that we're going to be covering in this show, the Business Talk with AJ, brought to you by Science CPA Services, accounting firm with multiple locations in the state of New Jersey. They can be reached at 908-380-6876 or their website sciencecpaservices.com. AJ, thank you so very much for your time and for your guidance. I am Sanjeev Pandya, wishing you all happy and smiley days ahead. Do take care of yourself. So long.